Okay, good afternoon to all of you. Today we start our January month market updates. And as we have mentioned in all our regular monthly updates, that what exactly is going to be the market like. And today also we will be sharing you different data point of global market, Indian market, and Indian economy, so that you can take a very informed decisions about your investments. Without wasting too much time, we'll go straight away towards the data. First of all, as our normal template goes, we'll show you how the global market is faring. Then we'll show you how Indian economy is faring, and then followed by the Indian market. And at the end, we'll give you a brief about what exactly happening overall and a suggestions from our side. This is a 30 minutes program that we normally wants to take. So moving on to the global economy, as we can see right now, in central bank are already printing a lot of money, which has been started from since the start of the COVID situations. We can see the graph here itself, and it has been unabated, like they are given continuing to doing so. To just give an example, in the November and December monthly update, we have mentioned that you can see a bit of correction happening in the Indian market as well as the global market, but that exactly not happened thanks to the COVID third wave, which has started from December midweek onwards. And what exactly happened in COVID is that because of the COVID third wave coming up, most of the central bank, most of the government, we are thinking of tightening their monetary policy. They have do a little bit of pause, because when you have the COVID situation come up, the healthcare and the government infrastructure get a lot of pressure, and that's why the government need to do the momentary subsidiary policies that they already have. So you can see the market, instead of going down, actually, which we have expected in the November and December market updates, market has corrected and does move upwards. Okay, and until the time we have this COVID third wave continuing, we will not see a major correction happening in the market also, because the monetary policy, printing presses, government subsidiaries, etc., will keep on continuing as usual. So we keep on continuing as our presentations goes. As you can see from the data that central bank across the globe, you can see the Fed, ECB, and all the banks, they keep on printing their money. And what exactly this resulted is that the huge amount of money supply happening into the market. There are a lot of liquidity into the market, as well as the bank, the companies, the individuals. They're having a lot of money in the market, and mostly this money from the last 2 to 3 years we have seen coming up in the stock market resulted in boosting of the stock market, stock prices across the globe. So going ahead, as usual, this data is portray of previous data. Global debt surged to a 50 years high. If you see, the total debt in the market is record level as of now. Public debts, household debts and non-corporation debts all have increased tremendously over the period of time. So which is normal, like everyone has having a highest amount of liquidity in the market, and this debt has risen because people have required more kind of money, and the money has been required because of a lot of government initiatives, government reforms that they have been doing, and as well as the public domain also, because of the COVID situation, which has been highest ever, which is quite evident from what I said earlier. Global liquidity pushed asset price highs. This is again a similar thing, as there is a huge amount of liquidity. Because of liquidity has happened because of huge amount of printing presses done by the government across the globe. So what we have seen is that the global liquidity here, if you see the global liquidity, this is the global liquidity, and this is the all wealth price, asset price. So if you see the asset price across the globe, it is like all-time high right now. Here it is asset price. If you can see, in 2006 it is much lower. It has increased a little bit, and then whatever the data has been pointed out, asset price has been a continuously high across the globe. This is quite normal because people have liquidity, a lot of money into the market, and this actually raises the inflation level. If you see the subsequent slide also, if you can see the inflation level going high, I am going to the slides is next 2 to 3 away from the slides. So coming back to the global economy, US stock market, the Standard & Poor S&P 500 earnings has record high in Q3. Like Indian market, we have seen the stock market reaching high. Even the stock market in US also reaching high. If you see the Standard & Poor 500 earning per share, it has increased to a record high in recent times. Okay, so that's quite evident, because global economy, global markets, everyone is performing extremely well because of the highest amount of liquidity available in the market. And there are other factors also which we are going to tell you later on. Now, coupled with the highest amount of liquidity, companies across the globe have raised over 100 trillion from the market. If you see the stock sales, this is the stock sales, this is the bond, and this is the loans. So if you can see the kind of money that has been raised by the company is abnormal. In last, coming back to the Indian market also, we have seen in 2021, there are 77 IPOs, 72 IPOs which has come up in the Indian market. And you see the kind of mad rush towards buying IPO also in 2021, and which has been there in 2022 also. So a lot of companies are raising a lot of money from the market. And how the company is raising money, because the reason why I'm saying this thing is because a lot of money lies in the market, in the market, with the consumers also, with the customers also, with the government also, because of highest amount of liquidity. And that's why they're able to raise so much of money from the market. Coming back, like global corporate capex is set to surge, which is quite normal. Moving ahead, growth has outperformed value. Now, this is a very important slide, as we have already mentioned earlier in all our webinars, that there are two kind of stocks which normally happen. One is a growth, one is a value. So, growth has outperformed value across from the 2010 onwards. In the last 1 year, 2 year, that gap has been phenomenal. So when we talk about the growth stock versus value stock, I'll give an example. Like if you talk about Maggie as a brand, Maggie is a growth stock, Nestle, and then you talk about Top Ramen. Top Ramen is a value stock. Okay, so that's a difference between growth and value, to be on a summary side. And to know details about what is exactly definition of growth stock and value stock, you need to follow my other webinars also. This is not a program for that, but this exactly shows that the growth stock has outperformed value stock. And that is one of the reason why I always mention that, since it has been every market, every sector has its own rally. Okay, so value stock has not been grown for over a period of time. Probably next 1 or 2 years you will see this blue color going up and red color going down. Okay, it can take 2 to 3 years time, but it will certainly going to happen. And that is the reason I'm saying that if you pick up a value stocks, if you pick a value fund, it is going to give you a super normal return in next 5 to 6 years. So this particular data itself suggests that pick up a value stocks from now on, we're going to give a massive amount of return to you, whether it's global market, whether it's Indian market. So again, if we talk about the Standard and Poor 500, the US index, 35% of the Standard Poor users, YTD return has come from only 5 stocks. What are the 5 stocks? If you see the Apple, if you see Microsoft, Google, Nvidia, and Tesla, these are stocks which has outperformed market in the last 2 to 3 years kind of thing, the kind of return that they have generated. And most of the return, like Standard and Poor total return, I've shown you the Standard and Poor EPS, like American stock market EPS. Most of this come from this 5 company itself. Facebook and Amazon has been underperforming, and rest of the 493 companies are much lower. So most of the return in the US has come from these 5 6 companies, which is shown here itself. Inflation, as I mentioned, I told you that in 3 to 4 slides we're going to have the inflation. This is a very important slide which I've been showing you from the October, November onwards. If you see the inflation in Brazil, it's nearly reaching 10%. Imagine inflation in India, which is currently about 4 to 5% level. We usually used to have 10 to 12% inflation in the time of 2009-10 onwards, and that's where we used to have a fixed deposit rates of 11-12%, and right now it is coming down to 4%, 5% kind of approximately level. So what inflation does is that actually it raises the government raises the fixed income rates also. So you are seeing a high amount of inflation rate in Brazil. If you see the G20 inflation, if you see the US inflation is nearly reaching 6%. So all the countries' inflation are risen. The reason because is their highest amount of money supply liquidity into the market, and that has raised a huge amount of money. You have seen the kind of money supply there. So somewhere down the line, this curve need to come down. Okay, this curve need to come down, and that is and how will it come down? Will come down with the central bank hiking interest rate. We have not seen interest rate getting hiked by most of the bank across the globe, but there is a strong, very strong indication that US Fed is going to hike interest rate 3 times in 2022. just because of COVID third wave, which has just started from the December mid onwards. They have pulled out their they hold back their interest rate hike policy, because if the hike interest rate, that will adversely impact the market, stock market, and everything. So just want to ease down the COVID third wave, and once it got eased down in next 2 to 3 months, you're going to see the interest rate hiking, because that's where they need to do monetary policy tightening. If the inflation rate goes abnormally high, it will be very difficult for any countries for a growth momentum to come up. So this is the only risk which I lies, as I mentioned earlier also, which will continue to be there in next 1 or 2 years time, till it rationalize to the level of this level kind of happening. So if the interest rate rises, stock market will come down. Okay, inflation already given a strong indication to all the Fed and all the companies, all the countries, central bank, that they need to rise the interest rate. So we have to wait. Thanks to COVID third wave, we have not seen market getting corrected deeper, but we have seen in a reverse movement itself, because the COVID third wave requires government to do a lot of subsidiary, a lot of other measures to help run the economy as it is. So moving on, supply pressure easing. So another reason for high inflation is that we have seen the supply pressure there. So why the supply pressure? Because of COVID situation, a lot of restrictions happen across the globe, and that is one of the reason why inflation goes high. Also, coupled with excessive liquidity in the market, and coupled with supply pressure. Supply pressure normally happens when there are restrictions for easy movement of goods from here and there, and and because of the COVID, lot of restriction, we know this happening. The supply pressure eases. This data is of as of December, so you can see this January, February, again the supply pressure going high, because of again the COVID surge happening across the globe, and lockdown and all those measures coming up. But this supply pressure will probably, once we have normalized COVID, normalized with a lot of people having vaccinated and all, in next 4 to 5 months you will see this pressure coming up. But this supply pressure easing will not only reduce the inflation number, which has gone high that much. Interest rate has to go high to keep it, make it lower itself. Okay, so that's what happening. And Omicron third wave has, well, third wave, we all know it is not been a major as like second, first and second wave. The deaths are much lower as well, but this time a lot of people are getting affected to it. We all know the reason that exactly. South Africa's data I have mentioned out here, more or less similar Indian data also. So that's what global economy is all about. To summarize global economy, I will say that inflation across the globe is at all-time high. Central bank across the globe are moving for interest rate hike, because to curb down the inflation rate. But they have just paused because of the COVID third wave, which has come up, because COVID third wave required governments to do a lot of subsidy and monetary policy, and help the nations to tide over that thing. So probably once the 2 3 months gone, COVID wave, third wave normalizes, you will see central bank coming in force and putting the monetary cap, so that the excess money which has pulled up into the market has to be pulled down, pull up, so that they can have a control over the inflation. And thirdly, a COVID Omicron wave, we have seen it has creating ravage across the globe, but normally this time death rate is low, so it will have not major impact. As well as the stock market of global economy goes, we have seen the Standard and Poor performing exceptionally well, thanks to the limited companies, like 5 6 companies top, they are performing extremely well, and that is the reasons S&P index has gone too much higher for that thing. So that's what global economy is all about. We have a strong expectation that Fed and as well as the central bank of across the world, they are going to hike the interest rate in days to come in 2022 itself. Coming back to the Indian economy, let's see how Indian economy is performing right now. And if we talk about the Indian economy, advanced tax collection in December, this is the data, it grew to 90% in Q3. Net direct tax collection jumped to 60%. COVID 3 may dent Q4 growth. We all know about this thing, because we have having a lockdown and all those things. And cabinet approved 76,000 crore policy booster for semiconducting manufacturing. Service sector PMI in December slows down. Indian manufacturing PMI falls. So in December mid onwards, probably in January and February also, you will see a slightly slowing down. But thanks to COVID, as I mentioned earlier also, because of the COVID second wave, we have seen a huge amount of improvement in Indian digitalization factor, and which has actually resulted in company making profit. If you see, as I mentioned, that if you see the 2 3 days back, TCS reports has come up, and they're making exceptional well profit this time. So thanks to the COVID, because most of the company has been digitalization, which has actually helped them reduce their costing also. And contrary to the popular belief that COVID has actually impacted them, most of the companies, if you see most of the nifty companies, 50 nifty 50 companies, they are making huge amount of profit, because just because of COVID, because input cost has reduced tremendously because of that thing. So moving ahead, I'm going to show you the data also. Will vaccination contain third wave? Well, third wave, we have seen a lot of people are getting affected, but we have a very slow death rate, and death rate are negligible in third wave itself. And vaccinations, probably next 1 or 2 months, it will got normalized, and you will see from from probably March, April onwards, the COVID things will normalize, and most of the people in India are anyway get vaccinated itself. The pace of vaccination is much higher than what exactly we see in US and other countries. New high in business resumption and the cups of a third wave. Now, this is a very important data point. If you see, we have showed you that whenever there is a COVID happening, the business resumption index has gone higher. Okay, and why this thing has happened is that this time we have seen that the court proceeding are also happening online. We have seen a lot of things which were earlier never been imagined of. We are doing everything in online, and when things are happening online, things move very very faster, and that's the result why the business resumption index has gone high. The data also says that. GST collection. Now, if you see the only one data point which will see the how the Indian economy is performing, if you see the GST collection, 1,30,000 crore collection in December itself. Okay, so that's the kind of, so we have been consistently increasing our GST collection. GST collection actually tells you exactly how much money, how much business, and how much revenue that the government is gathering. Obviously, there has been a business, and that's why the GST collection has been all-time high. Bearing April, we are nearly about April 1,40,000. We are like 1,30,000 crore. Consistently, we are able to achieve that thing. So that's what exactly happened. So if people say that COVID has impacted business, this data is saying otherwise. Manufacturing activity started turning positive. We have seen the manufacturing activity goes down because a lot of companies are shut down, and but it has started turning positive from this year onwards. The data also suggests that. Indian export jumped to a record level high. So if you see the data point from FY 2020, FY 2010, we have seen that Indian export has increased to a tremendous level. I made a slide later on also where you will see that India, earlier we have a lot of worry about highest amount of oil import, and our forex and capex actually impacted. But because of Indian export going tremendously high, which we have overcome that fiscal deficit and capex problem also. And thanks to Indian IT companies, Indian IT export has been tremendously high over the last 1 year. And extra 2.6 trillion revenue to the central government in 2022 FY year. We are expecting extra $2.6 trillion revenue to the central government by way of personal income tax, corporate tax, GST, excise duty, custom duty, and RBI and PSU dividend. Uh, Central relax fiscal deficit to help capex funding. This is a fiscal deficit percentage of GDP. As you can see, the fiscal deficit, the percentage of GDP, is going to decrease in days to come. And we have been having a very, very low fiscal deficit also, thanks to the lot of the government measures that we have taken. And this is an important data point, because lower of fiscal deficit always helps government to do a lot of development activities and infrastructure funding. Moving on, structural profit cycle is the first phase of normalizations. I will not go details into this thing. It will take a longer time. Consumption and investment both on the rise. Well, this data point itself says, if you carefully see all the data points, which might not be possible in the shortest time span, but you can see the real GDP growth out here. We have a contraction in FY, first quarter FY because of the COVID second wave, but we have seen the kind of growth that the GDP is having. So in this year itself, in 2022, World Bank has also forecasted Indian GDP to be the highest GDP across the globe. Okay, so that's a prediction that we have, and we are seeing the kind of growth that India is having in this year also. Across all segment, if you can see, we are actually growing. If you see the data point 2016 to 2021 and 22 projection, all the segment which we will be growing from all the previous sector, be it private consumption, government consumption, inventory, valuable export and imports. So that's a very, very positive data point that we are going to have in days to come. Sorry. Indian startup has raised a record capital in FY 2021, which is evident because we have seen a lot of IPOs coming up where we have raised a lot of fund. And this is not about the IPO, this is about the VC funding. So a lot of Indian startups has raised a huge amount of money. The data is quite relevant. And if you see the number here, which is exactly self-explanatory. Now, this is a data point which is very, very crucial, like PLI schemes to create a huge employment opportunity. Now, recently, I'm going through a report in World Bank. They have said that the PLI schemes of central government is going to be a differentiator in days to come. And this scheme itself is going to make India the most developing country in the world, overcoming China and all other countries. The PLI scheme is actually, those who are not aware of it, it is actually an incentive that central government give to manufacturing and other sectors for performing well. It's a production linked incentive schemes. Okay, so like incentives are what, like subsidies, lowering of taxes and all those things. Now, if you see, this is the planned outlay. Okay, if you see the automobile and auto sector, the 5-year outlay, this and the kind of job it will create it is tremendous. It has already been announced. The program has already been placed for the 5 years, and if you see the different stages that they are into, this PLI scheme will be a game changer for India. And what we are saying is that the kind of GDP growth that we are having, this PLI schemes in next 5 to 6 years will make India a huge amount of developing countries across all segments, which has already been predicted by the World Bank itself. So watch out for this scheme. This will be a game changer itself. A different segment 5-year outlay has been mentioned here, and the kind of job it will be created is already mentioned out here. And where is the project is lying, I've already mentioned this thing. So I'm not going each one because that will take a longer time. But this particular slides will give you a lot of confidence in next 5 to 6 years where India is going to achieve. And if you're going to see a huge amount of development in each and every sector, imagine the kind of market capitalization it will generate and the stock market impact it will have. So, as I mentioned, this is an IT exporter surpassed the gross import wheel. I mentioned a couple of slides back. Now, in 2013, 12, 13, we are having fragile economies. We have this. This is the imports and this is the export. We are having a more. We are having a fiscal gap current account deficits at that time. But right now, if you see the data point, we have an IT export bill more than the oil import bill, which is a huge advantage for India. And going on, India likely to be the first place growing major economy. I just mentioned because this thing exactly happened because of the PLI schemes. India will be the fastest growing major economy, both as well as the nominal and the real GDP account across the globe. And this thing is going to happen in next 5 years, like 2026, 2028. You're going to see this thing is going to happen, and consistently we are going to outperform all countries across the globe. India back on the top of emerging market tracker. All this data point what I mentioned, we have taken from either Bloomberg, Mint, or other global recognized platform. So you can vouch for this data point. And India back on the top of emerging market tracker. If you see all the parameter composite index, we have number one. Real GDP growth, we are number one. PMI, manufacturing index, export growth, CPI inflations, import cover, exchange rate movements, and stock market capitalizations. So most of these number we are parameters, we are number one ahead of China, Russia, and other countries itself in developing market. So that's the point that we're going to mention is that next, I always mention that 2020 to 2030 is the year of India. So like in 1990s, 20 years, 25 years, that China has grown tremendously. From 2020, you're going to see that thing happening to India for next 10 to 15 years kind of time. So if you're putting your money in India, you are going to make a huge amount of wealth with India rising. And all the points which I mentioned earlier, whether it's a PLI schemes, whether the market cap that India is having, you're going to make a huge benefit out of it. Short-term fluctuations, volatility will be there, but long-term, we're going to have a major impact. All the data points, when I was collating, it actually shows like that. Focus investment theme. Uh, Big getting bigger, strong getting stronger, revival of industrial manufacturing, export opportunity, real estate, digitalization, and financializations. See the big getting bigger and strong getting stronger. If you see the general insurance and private sector, like these are the companies, 76% companies, incremental share difference. This was in a FY 17 and this FY is in a FY 20. So most of the stronger company, based on the volume of aviation, steel, cement, and settled bank and NBFC gross premium insurance. So a lot of consolidations are happening in across sector. Okay, so in general insurance, we have 76% consolidation. Cement, top five companies accounts for 100% total revenue right now. So earlier it was in 2017, it was 51%. So what I mentioned, that big is getting bigger. A lot of consolidation happening across different segment. Revival of industrial manufacturing and private sector. I already mentioned this earlier also. I quickly move. Export opportunity. I already mentioned that 2011 to 2020, IT export has gone tremendously high. And Indian pharma sector, you see the kind of export that is happening in pharma. And this is the individual company-wise profit growth, which has been mentioned out here. Export theme, chemicals, pharmaceutical, autos, like in FY 2010 to FY 2022 and FY 2023 projection number. So if you see the projection number in chemicals, pharmaceutical, and auto with 2010 to FY 2022, it's like all are 4 times higher, right? So that's the kind of growth that we are expecting, and we have seen actually also, and we are expecting in future also. In FY 2021, if you see the pharmaceutical scoring 19.4, it is going to have 22.9 in FY 2023. So that's a clear cut 20% rise from here in next 1 or 2 years kind of time. As an industry, I'm saying that there are growing export growth that we are expecting. Real estate and home improvement. Well, we are having lowest amount of interest rate, 10-year bonds. We all know affordability has increased for the for across the people. Top developer shares. They have a lot of launches, new product launches, but real estate has not revived till now for the last 4 to 5 years. We all know prices are very attractive, interest rate are very low. So we are expecting in next 1 or 2 years, with a lot of tax incentive government are giving, in next 1 or 2 years, again you are going to see some kind of real estate boom coming up in India. But this time it will not be, it will be for the real user kind of thing. Lastly, we have seen a lot of people going and buying real estate, 2, 3, 4 real estate, but this time you're going to see a lot of people buying real estate for their own uses. And the reason for that, this thing is that there are financialization of asset classes happened. I have done this slides in later on where you can able to understand that most of the funds, most of the cash, and most of the this thing has gone to the financialization of savings rather than real estate and all those kind of asset class, because financialization of saving has given them a huge amount of returns vis-a-vis the other product category. Real estate theme, I will not going to discuss more about it. Digitalizations, we all know as a theme itself, digitalization has increased. I don't need to mention anything because of COVID situation. Thanks to COVID situation in 2030, what we are expecting, we have already got that in 2021, 2022. So India, like we never imagined the court cases to be happen on online, but right now we are having that online right now. So the kind of, you can see the measures, the kind of changes that we have seen over the years. Moving on, top 5 digitalization pioneering company, healthcare. Across all segment, we have going to see the digitalization happening. It's not about the one particular segment. I don't need to mention that. This is normal data point which I've gathered. Now, if you see the financialization of savings trend is gaining traction. Number of mutual fund folio from 2015 to 2021 has increased ever 2.5 times. Household savings and also physical household saving percentage of household savings are increased. huge potential ahead, themes of financialization. So now this is an important data point when we see an India as a country. 7% Indian. If you see the total data point out here, this is exactly it is not exactly visible. 47%, 57% of people are still holding the bank. This thing vis-a-vis only 7% has invested in equity shares and mutual fund. And if you see the all other countries, like 22%, most of the companies, average companies, have invested 22 to 30% in the shares and mutual fund companies, where Indian household, Indian domestic investor invested only 7%. So, but this number has increased over the last couple of years. So you're going to see a major transformations from investment into fixed deposits, all those asset class from the equity shares and mutual fund kind of thing, where they will be participatory of Indian growth story. So that's exactly happened. So if you see all the data point of different countries vis-a-vis India, this data point is very, very less, this equity and mutual funds itself. Okay, and this is going to rise. This 7% I'm writing today, like 1 or 2 years back, it was like 4 to 5%. It has gone high in last 1 or 2 years. This 7% in next 5 to 6 years, are going to see 26 to 27%. Imagine with the kind of asset, with the kind of market cap India has, all this money from fixed deposit and other asset class moving to the equity segment, the kind of rise, the kind of money will come to the Indian equity market. Moving on, Indian equity market. Well, we talk about global economy, we talk about Indian economy. Now we'll give you a little bit of briefs about what Indian equity market is happening. Well, nothing to mention. Last 1 year has been exceptionally well. In last 1 year, we have seen all that. This is a small cap return. Okay, last 1 year, 59%, mid cap return 46%, and Nifty return 24%. So this has been a phenomenal increase in the last 1 year things. So, uh, and this is a segment return that I want to mention, that different segment kind of return that they have shown in last 1 year kind of thing. And going ahead, India attracted better flow than its peers. If we talk about the FI inflow, we have the data clearly shows that we have gathered much better inflow than all other Indian peers. Moving on, rising trend in FPI capital, FPI primary flow. Primary market, which is a market where where IPOs happen, there has been a rising trend of buying Indian companies in the primary market. So that is happening. And going on, just a minute, system hangs, just a minute. Okay, we were there itself. Sorry. So we are there. So DII inflows has been relatively stronger in CY 2021. And if you see the DII inflow out here in CY, so domestic participatory investment, domestic institutional investor has increased their participation in India over the years. And going on, we have seen retail investors as a large buyer. That is quite evident in last 1 or 2 months, 1 or 2 years. In fact, the retail investors are coming up. I have shown you the data point earlier also. Earlier, in 2 to 3 years back, only 3 to 4% of Indian actually normally invested in stock market and mutual funds. But right now, it has gone up to the number of 7%, which is relevant in this data point itself. From 2010 to 2021, I have shown you the data point. And if you see that this, retail participations, which has been exceptionally high in the last 1 year. Okay, so that is quite evident, and this number is going to rise. Indian outperform all its peers in MSMI emerging market, which is quite evident. Indian stock market has been outperforming across all the segment, all the market in the emerging market space. rally continue in a few name. I quickly move ahead. So coming to the conclusion part, we can say that valuation wise we are neutral weight and momentum wise we are neutral weight. The reason for this is this. And imagine I have shown you the market cap to GDP ratio of India to be 111 in the month of December, which has gone down to 104. Remember, this data point is as of December. So last 10 days, Indian market has gone high. We have reached over 60,000 level. So probably this is data point as of 31st December. So is 104, which is a normal average of Indian market cap to GDP. If we take a normal average to be 100% is 104, and expected to 2022 will be 116 right now. World market cap to GDP is 144. So if you see the global market, we are way below that global market average trend. India, since inception, market cap to GDP has been 76%. Now, this is an important data point. Those who have heard me about saying about Indian stock market, shares, valuation, and all those things, a market cap to GDP is a very, very important criteria to understand where the market is right now. So it is as of 31st December, it is 104. Indian since inception average is 76%. So if you consider 76%, it is a higher, but 104 with the respective of 144 global average, we are much lesser point of view. So in that way, we are not that costly, or we are not that very cheap. We are at a neutral, which I just mentioned earlier slides. This has been relevant in this coming data point also. So if you see the Nifty forward P, 1 year P, it is 20.8. We have an average of 18.2, just 8 to 9% higher up. Forward PB is also 3.2 right now, and which is an average of 2.7. So 8 to 9%, you can say we are marketed a little bit higher up as of 31st December. But yes, last 10 days we have seen a steep rise in the market. I'm not counting that thing. So, but as of 31st, we are normally fairly valued as far as the market goes. Okay. Uh, so this is a corporate profitability is a crucial for market. And if you see the GDP growth in FY20 is 4%. We have seen a drop in a GDP growth. FY22 we have a strong GDP projections, and FY23 also. And Nifty 50 company profit growth we are expecting also a higher growth, as well as the EPS and PE ratio. And this is mainly driven because of cost cut, tax cut, interest rate reduction, and debt reduction, and higher working capital flow. So that is the advantage that we have because of most of the company moving into the digitalization, and we are leveraging operating uh, flow itself. So that itself will actually drive the market from here on. Um, if we talk about the equity market, we are marginally overweight in large cap, marginally underweight in mid cap, neutral weight in small cap, and neutral weight in equity. What that exactly means that if you have a large cap space, you can go a little bit of overweight, and in mid cap space you can go a little bit of underweight according to your holding capacity right now. Small cap you can remain neutral, and equity you can remain a neutral weight. What that exactly means, I will tell you in my summary conclusion just 5 minutes from now. So this is the crypto as an asset class that anyone who have invested in last 1 year, couple of cryptos has given 400, 500% return. Yes, that's true. If you see the Bitcoin return in last 1 year is 66%, and one of the popular coins like Cardano and all those coins has increased 646%. So this is the kind of return that has given up by the cryptos. But again, crypto is a different asset class. If you want to know details about that, I have a different sessions altogether in crypto. You can attend that, and you can get a knowledge before getting into these particular options. uh, Concern, I already mentioned Omicron. I don't think it's a big concern. It will remain for again next 1 or 2 months. And thanks to Omicron only, I was expecting a market correction in November and December market updates. If you remember, thanks to Omicron, it has not happened. The government has not done the tightening thing in as far as the monetary policies goes, because they need to do a lot of subsidiaries and other infrastructure push during this COVID thing. So again, 1 or 2 months, you are not going to see a deep cut in the market, and thanks to the Omicron. But once Omicron settle down, probably 1 or 2 months down the line, you are going to see the Fed as well as all the central bank coming down on interest rate, increase the interest rate, and that will have an adverse impact. So Omicron risk scenario, I am seeing that in a short to long run, it will remain. Obviously, for the health wise, it's a concern, but from the market point of view, it's a blessing. Like we have seen, contrary to the popular belief, all the COVID has actually pushed the market higher because a lot of printing happening because of COVID. Government has supported the economy across the globe. So Omicron health perspective is a concern. Well, not likely like second wave, but from the market point of view, in coming 1 or 2 months, you don't expect a deep cut because of the Omicron third wave, which happened from December end onwards. Impact of taper tantrum, this is going to happen. I was constantly telling you, with the kind of liquidity into the market that need to be curved. Okay, so if you see the inflation, India and US, like we used to have at near about 10% inflation in 2013. US has 2.6%. And if you see the inflation right now, US inflation is higher than India, which is abnormal. Okay, so this data need to be reversed vis-a-vis the country total growth perspective. And when it got reversed, there will be a lot of correction happening into the market. If you see the 10-year GSEC yield value, I've already mentioned all those data point out here. So wait for a couple of months, because of thanks to COVID, till March you're not going to see a major rate cuts happening, major rate hike happening across the globe, probably. But this year, I am very sure that Fed will come up with 2 to 3 times rate hike, and that's going to impact. Uh, Going on, geopolitical risk, India and China is already there. China and Taiwan is there, which is beyond our control. But I don't think China and India will go for a full-fledged war. There will be business issues, there will be trade wars kind of thing happening, but that is advantage for India with the government coming up with the PLI schemes. PLI scheme, as I mentioned earlier, it is going to be a game changer for India, which is going to boost our GDP to the extremely higher level. So watch out for the PLI scheme. And I already mentioned earlier that the kind of project, kind of outlay the government has planned for the 5 years, and that is going to create a lot of job opportunity in the market, and that's going to have a huge impact in the global Indian market as a whole. So geopolitical risk is good for India, because a lot of people, a lot of companies, as I already shown, that if we are that FIIs, a lot of companies this time is coming to India and creating their base. This PLI scheme, which is actually giving incentive and tax rebate for people setting up manufacturing units in India, will actually help India in the long run. Inflation, I already mentioned, that is the risk there. So all those, apart from all the positive points where India performing well in the index, PLI schemes, Omicron third wave helping digitalization boost faster, this is the only risk factor which lies at the inflation. Because inflation, although in India it is not much higher, I have shown you earlier that we at India at around 4 to 4.5%, unlike US. But yes, we cannot go aloof. Like all the global economy are very, very interlinked. So if something happened globally with the interest rate and inflation, it is going to impact India. But thanks to Indian forex reserve right now, which is an all-time high, we are not going to see a huge impact what we are going to see in 2008. If you remember, in subprime crisis, when we have market crash to 21,000 to 8,000 level in 2008-9, that is not going to happen in India, obviously, because that time Indian forex reserve was not strong. We have a very, very strong forex reserve right now. But this is the only risk factor line and going to impact market in a short time. Moving on, should we invest in gold? Well, I mentioned always that gold should be a strategic investment point of view. I mentioned that if you have 100 rupees total asset class, 5 rupees should go towards the gold. We have a new silver ETF which has come up across. So you can buy silver also if you do not have silver in a paper format. Those who are willing to do, they can contact me and my team later on in this webinar after the webinar happens. Most of the companies are coming up with the ETF, silver ETF. You can do a little bit of exposure, because why silver I am mentioning is that a lot of digitalization happening, and silver is one of the key ingredient for these companies. Okay. Sorry. So again, gold and silver is a strategic investment. 5% of your investment should go towards that. Moving on, debt market outlook. Well, I will not mention two details about debt market outlook. It will take a longer time for me. But just I want to say that India, we are placed very well, 4 to 4.5% level. We don't expect a rate hike very near terms. But going ahead with what the other central banks are doing, that can have an impact. but rates will normally remain as it is in the next couple of times. We are having the best performing global debt across the global emerging market. We will remain as it is. The central bank actually, RBI has actually done a tremendously good job in actually maintaining, Indian bond yields as far as is concerned. Mm, we already mentioned this thing. So this is a key variable and their impact on interest rate. I mentioned all of these things. So this is the last slides before I finish off. This is when we talk about the economy in a short term, in a medium term, we'll have a momentum. Economy is likely to have a massive improvement because of all the points which I mentioned. Earning corporate earnings, we are seeing a massive growth. Now, January is a month with there is a lot of corporate earning results are coming. Last 2 3 days back, we have seen the TCS corporate earnings coming up, and they create a huge amount of profit. So most of the companies will be declaring their quarterly results in January. A lot of dates are already fixed up out there, and if you see those quarterly results, they are having a huge amount of profit growth. So that's what I mentioned. FII flow will continue to have a momentum. DII flow, you will see a more coming up to India right now. We are domestic insurance investor. You have a lot of domestic player, domestic retail customer will keep on investing in India. Supply of paper will be lower. That is quite evident because last 2 to 3 years, government has supplied a lot of money into the Indian market, and that has to be contracted. That has to be pulled up. Policy reforms, it will continue from the government point of view. Uh, that's what is all about. And just wait. Okay, so that's not. So that's what is from my side about January market update. To summarize what I mentioned today, I said in earlier review about November and December. From October onwards, that market has been, we were expecting a correction in November and December because of higher market cap to GDP and inflation rate going high. But in December mid onwards, we have seen that there has been a Omicron third wave which has come up and which actually paused the government initiative of monetary tightening. So till that Omicron wave remain, you are not going to see the government coming up with the harsher steps of increasing interest rate. And so like next 2 to 3 months, we will have the momentum as it is. And anyway, in India, we have a great corporate earnings coming up. All the companies are making huge amount of profit. Contrary to the popular belief that Omicron has impacted companies, it is otherwise because they are having a huge operating leverage. Most of the companies, they are gone digital, and once they have gone digital, they have cut their huge cost. So if you see the profit and loss, they are having a higher top line because of going online, which is quite evident. Things are moving faster, and as a result of operating cost leverage, because the cost has reduced, the employee cost has reduced, the operating offices cost has reduced, and the transaction has actually increased, so which has actually happened in higher of bottom line also. And that's what's exactly happened in corporate profitability. So corporate profitability is increasing. uh, and government reforms measures are already in place. We have already shown you the what the PLI schemes can do. The World Bank also accepted that. Having all those positive things, the only concern factor is a huge amount of liquidity in the market, and that's the concern area, and that will remain. And so I guess that with Fed and other central bank increasing interest rate this year, sometime we can have a little bit of fluctuation here and there in the stock market. But next 5 to 6 years, you are going to have a huge amount of, you can huge amount of create a wealth in Indian market. So stay invested, and if you have any queries, you can drop by in a chat box. My team will get back to you. And for investment point of view, I can only say that if you are looking for a lump sum investment, don't put up in one. Don't put all your money with one price, either NAV or stock prices. There are stocks which are available cheaper, and but there are stocks which you want to buy a good companies. Do a buy in a staggered way. There are ways of investing. You can talk to us separately about that. For gold and other asset class, you should take it as strategically. You should invest not more than 5%. There are silver opening coming up, ETF coming up. You can do a little bit of exposure there. And for cryptos and Other asset class, well, in next 5 to 6 years you're going to see a lot of happening in blockchain and crypto space, but that is a space which you need to know before investing. So if you are interested in any of those investment asset class, do drop your query in a chat box. Our team will get back to you. I have exclusive sessions of each and every asset class, and which will help you out in deciding whether you want to invest or not. So thank you. Stay safe and stay healthy. Next month also we are going to have a market updates. So this, as of January, we are very positive about Indian stock market right now, with a little bit of fluctuations here and there, only from the inflation perspective. Other things look extremely positive right now. So not taking much of your time, thank you for attending today's sessions. Catch you next month in the same time. We will let you know about the exact date of that thing. And if you have any query, drop in a chat box. Thanks.